Good day traders, and welcome to Liquidity Academy. In this video I'll be sharing with you technical analysis as a topic. So what is technical analysis? Technical analysis is a tool used to understand the language and to interpret markets, right? It's a language actually you need to learn in trading. It helps you to interpret and get a bias, or analyze the market and get a bias, right, or an anticipation of next price action or next price movement. It helps you understand market structure, price action, and the chart as a whole in general. So it's a tool that every single trader as a person must learn in this forex space, and I would likely encourage you to subscribe to my channel and click on the notification bell to get more updates when next we post our next content. I would like you to pay attention. Don't mind the length of this video. This topic is a very big, broad topic, so I will not be able to teach it within 5 to 4 minutes. For you to fully understand, I have to take my time to break down every single aspect of this topic into smaller pieces. So please, I will encourage you to take your time, get a book and learn. Just stay away from distraction. Let's grind this topic. Okay, so first, what is technical analysis? I have defined it, but I will give you a simple definition. Technical analysis is a way of analyzing the markets, right? Although we have other ways, we have fundamental analysis, right? As you can see by the name, it's a way of understanding price action in the forex market, and it's applicable to the chart only. So when you look at your chart, the first thing you see is price and time, to show you that this is a price time chart. And you see a lot of candlesticks, because for a price to time chart we have different types of chart method, but candlestick is the most commonly used chart pattern and chart setup, let me put it that way, for you to apply good proper technical analysis tools. So we have so many technical analysis tools in our in the forex market at large, and if you want to see a lot of them, you can go to your trading view. Your trading view here, and I'm using a laptop, so you see the tools here. But if you're using a phone, you see something like an edit or pencil icon with a line. You click on it, you see a drop down come up, and you see a list of tools. Okay, so now on this I'm going to be using this, and these are the tools we use in technical analysis. The common ones are the one I put, this one I put as favorite are the ones that I use most often, but the common ones are trend line ray, horizontal ray, horizontal line, cross line, underlines, when we have fib retracement. I don't know, I know of someone that uses Gann box as part of a strategy. You can also use it, but not like majority of traders don't really use Gann box, right? But you can look at it. And then we have more other tools. We have short and long position, short position. This is to place a trade and to adjust the TP and adjust your SL. It allows you to also calculate your risk to reward, to see how many pips is your profit target and how many pips or points is your stop loss, so that you can actually calculate and adjust your risk management, right, on your trade, to make sure that things are going properly. So all these tools are to make sure that you become as precise as possible in your analysis. Why this arrow I've used for teaching, like for me, if I want to or to share my idea or bias on something in the charts, I will use these tools like arrow, this pathway, to show, okay, yes, this is what price is and this is what I'm expecting price to do. This rectangle is to map out zones, like say demand, supply, resistance, and supports, so this, you can also use this rotating rectangle, but what differentiates the both of them is that one can turn 360 to any angle, but this one is only at 180 degree. So you can also use curve, circle, path, arrow. Then we have text. This anchor text. So difference between anchor text and normal text. Text is just like you can just put a text, but it's not anchored, meaning if I move away from that zone, it's automatically we move together. It's just like putting a text at the background. Alright, but anchored text is like putting the text on top of everything, so the text will always be in the chart. No matter where I go in the chart will always be in the chart. And we also have notes, price notes, pin, table, comments, whatever, image, and tweets and ideas. So this is just everything. All these ones are just for joke. So that is all you need to know about your technical analysis tools. Sorry. So now you need to learn how to apply them into the charts. So first, you can just add to favorite like I did. You can click on any of them and click on this star sign, which automatically add to your favorite. And to make sure your favorite shows in the charts, you can click on this. If you're using a laptop, if you're using a mobile phone, you see it there, add favorite to charts, and you can simply add to chart from there. So let's talk about difference between technical analysis and fundamental analysis. So I would like to bring a very good light to this topic, because many traders mistake technical analysis to fundamental analysis. Okay, so what you need to know is technical analysis is more of chart-based analysis, but fundamental analysis is more of news-based analysis. What do I mean by that? I mean, when you're talking about technical analysis, you're talking about charts. Which price level the chart, the market go to, right? At what time? And what happened? Did it hit an order block? Did it mitigate something? Or is market still trending? Is it on a demand zone, or is it going to a supply zone? Is it on the resistance? Is it on the supports? Is it at my 50 fib level? These are under technical analysis. That's when you talk about chart-based analysis. But when you're talking about fundamental analysis, you're looking at, okay, how can I predict NFP? What am I anticipating? NFP have been bad for the last let's say for the last 3 months, and then you're like, okay, this next NFP, if I check my my past data, NFP have been getting worse and worse, more worse than good. So I'm expecting this coming NFP to either become neutral or worse. Now that is where you're now working on fundamental analysis. Although I would like to do a video on how you can analyze NFP, because I myself I predict NFP, CPI and PPI, that is consumer price index and producer price index, and you need to know how you can also apply fundamental analysis and technical analysis in your analysis, right? It's also very, very important because it helps you to get precise market direction. Like it increases your probability of getting that trade properly, but it makes you trade less often. I should be very honest, because I've done that. It makes you trade less often because you have to wait for news events to occur, but it also increases the probability of you making profit in that trade. So more of the big banks and top people who have billions of dollars who can place trade, like let's say 10 times in a year or 2 times in a month, they are the guys that actually do these things. But if you're a scalper or beginner trader, you need to know how to balance both. So that is all I need to know about fundamental analysis. So when you're talking about fundamental analysis, you're talking about interest rates. What did the Federal Reserve say concerning so and so issue in the bank? What is Bank of Japan saying, right? What is the Fed saying? What is Powell saying? This is where you have to start looking at more of news. And if you want to see this news, you go to platform like Bloomberg, like CNBC. Okay, you can go to investing.com. You can go to which other platform again? There are so many online. Okay, there are so many online, so you can just go to these platforms to check it out and know what's is going on, like for live news. But if you want to see data, fundamental data, that's where you go to my FX book, you go to Forest Factory. These are the two I'll recommend for you. The rest, to keep things simple, this tool will show you economic calendar on, like, they will simplify everything into simple data for you to understand, to look and predict that, okay, yeah, price is doing this and price is doing this. You understand? So that is the difference between technical analysis and fundamental analysis. And what I'm going to be teaching you in this video is technical analysis. So now, the psychology behind technical analysis is simple. But to cut this video short, I won't be talking on that. So I couldn't have brought that topic, I'm sorry. Let's focus more on technical analysis. So now the first thing you need to work on when talking about technical analysis is you need to know trend line, support, resistance, supply, and demand zone. If you don't know these 5 things I just called out, you're not ready. In fact, you know nothing, absolutely nothing in technical analysis, and I completely get you. Alright, I'm here to help you, to guide you through all aspects of trading if possible, and to make sure that you get things accurately in the charts. So now what you need to do, or what I'm going to teach you on, to save time, let's go straight to the chart. So first, what is support? Support is a price level where whenever market or whenever price reach that zone, it always reacts. For example, say I have an airport here, and let's say this airport is a very popular, let's say it's owned by Apple, and it is raining, like it's very popular, right? And everybody wants one of these. So now let's say the price of this airport is, let's say it costs $30, and let's say later on, let's say in the next 2 to 3 weeks, the price dropped to $25. You see that once the price dropped to $25, a lot of people want to buy that airport. Why? Because it is at least 25% cheaper than the actual price. Everybody wants that airport at that moment. Once people start buying the airport, the demand, right? The demand for that product increases, right? The price will go higher. If you study economics, you know that the cost of the demand increases, the price go higher, and then the price end up going even more than the $30, breaking the resistance of 30 to, like, let's say 25. So when next ever that airport drops to that $25, everybody will want to buy that airport again, because that is the cheapest price it can reach. At that moment, that $25 becomes the demand zone, and whatever peak price it has reached becomes the supply zone, or let's say support and resistance if you want to switch it upside. So that is just an example, and I will show you in the chart what this can do. You see majorly on higher time frame, an hour time frame, 2 hours, so you always see them on higher time frames. So let's see if we come back. So now this right here, you see here, is what? Is it support, resistance, or supply and demand? It's a support. So now let me make it clear. Support level are temporary levels that price reacts to, like it's temporary demand zone, let me put it that way, that whenever price reaches there, we are expecting price to reverse towards the upside. Resistance level are temporary price level that we know that whenever price reaches this level, price is going to reverse to the downside. So resistance level is going to be something like this. This is a temporary level, but supply is different. Supply is like a stronger support level. Supply is like a stronger resistance level that no matter what, once price reach there, like we are expecting price to pump to the upside. Supply can take like 4 to 5 to 6 bounce and it will still be valid. For example, support level is always like this. Support price can just give it like 1 bounce, like 2 bounce, 3 bounce, and then do something like this and break and retest there. Good. So this zones becomes what? Support that has turned into a resistance. So it was formerly a support, but now it has turned to resistance. So the support zone, and now it's not a resistance zone from here. It's not a resistance zone. Hope you understand that. So it can take like 2 to 3 bounces, sometimes 4 or 5. Highest 4. I don't know about 5. I've not seen that. Then it breaks. But supply and demand is different. Demand zone, price can do something like this: 1, 2, 3, 4, and still bounce over the upside and come back again 5 and still expect it again 6, or let's say 5 and then breaks, then come here like this and do it like this. Right? This is not a support. This is a demand zone. Right? This is a demand zone. This is a demand zone. This is a demand zone because whenever price comes to that level, price will always, majority of the time, react towards the upside. Yeah. Same thing to resistance zone, right? So this is all you need to know about support and resistance. So let's go to the chart and mark out support and resistance zones. So first, we have marked out 1 support and 1 resistance. As you can see how price is reacting to this zone here. Immediately price came to the support, started reacting from this week, and then price is going down lower. So let's see whether market will respect this or break it. Once it breaks it, this turns into a resistance and no longer a support. So that is all you need to know about that. Then if you look at supply and demand, let's see if I can find supply and demand. Supply and demand, they're very hard to find, but you majorly find them on higher time frame. Oh, I forgot gold is just going up all-time high. So currently, to the current gold price, this is gold supply zone, right? Whatever, this is gold supply zone, right? And gold demand zone is now here. This gold demand zone, right? So yes, so that's what we are saying currently. So that's all you need to know about supply, resistance, support and demand zone. If you want more idea or more knowledge on it, you can go to my video in this channel and you will see a video I did currently, supply and demand zone, support and resistance. It's a full guide. I'll teach you everything you know about that, right? So now you need to know about candlestick patterns. When you're talking about technical analysis, you need to know about candlestick patterns. So I believe you all know about candlestick patterns. We have the doji candlestick, we have the inverted head, inverted hammer, we have the heads and shoulder. That's just pattern. Sorry. We have evening star, morning star. So let's get So what candlestick pattern is this? I want you guys to tell me in the comment section. This one here that has no wick, what candlestick pattern is this? Alright, and also what candlestick pattern is this? What candlestick pattern is this? So they are very common candlestick patterns and they mean a lot in the market. Alright, I'll just give you a hint. This one, for this kind of candlestick to be bullish, it means that market is going to be bullish, like buyers are in control. And what's happened after the candlestick pattern? A small pullback and then towards the upside. Why this candlestick means sellers are in control? What? Yeah, buyers came, push it up, but sellers still came lower than the candlestick itself before price started going towards the upside. So they all have a name. Okay, so I will not talk about those tools. You guys can do research and send to me in the comment section. So you need to know how I will send a PDF. I'll send a PDF in the description below called Trading Bible. In that Trading Bible, you're gonna be able to access everything you need to know about candlestick pattern. So candlestick pattern are patterns that shows us price action in the market. It shows us if buyers are in control or sellers are in control. For example, this candlestick pattern, right? Let me use this one as an example. Shows us that buyers are in control. This candlestick pattern shows that buyers are in control. What happened? Sellers came and pushed the market towards the downside, but sellers couldn't take it lower. It said a buy candle came up here, just like a moderated tried. So this alone shows you that so get ready for a buy. So we are expecting price to go towards upside, right? What happened after this buy candle? Price went higher. Most times you always put your TP at the high, that is the high of the previous candlestick, this one. And what happened? Price came and went and broke the TP, went a little bit higher, then started falling towards the 50-50 level, went higher again and started falling again before going higher again. So that's how powerful candlestick pattern is. There's also another one. This is an inverted hammer. This one here, and you will see it in the PDF I'm going to send below in my description. And this candlestick pattern helps you to see that sellers are in control, because the buyers trying to push this price higher. What happened? Sellers came and brought it lower, very close to the opening price. This is the opening price and this is the closing price, but this is the highest price I've recently seen. Sellers dominated more of the time, so it shows that sellers are in control of this market. And what happened in this candlestick is what a sell candle. And I will advise you, whenever you're using candlestick pattern, always look at the higher time frame to use this chart tools. Candlestick patterns are very, very, very valid on higher time frame, from 1 hour to 1 month time frame. Whenever you see this candlestick pattern, they are very, very valid. But when you look at 30 minutes, 15 minutes, 5 minutes, 1 second, those candlestick patterns, I don't know about you guys, but for me they are bullshit, right? They don't really work on lower time frame, because it's just emotions. On the lower time frame you see a lot of emotions and you not even know what to do. But when you're looking at higher time frame and a price action trader, you can see that this is a candlestick pattern and this is what it means. It means that sellers are in charge here. If this was a higher time frame, you have made this whole pips, this whole price level, this whole profits on the lower time frame. For example, let me go to a daily time frame, or daily time frame, and you see this shows that buyers are in control, right? So now you in this day you are looking for buy entry and price give you this amount of pips and you took your profit, because your profit should be always at this high. It should be your profit target this high here, and your profit and price. See, price broke your profit target. I even went higher a little bit, except you're not too greedy. But if you put your TP here, you are on profit at this level. If you go to the lower time to confirm your setup. So I would advise you to use candlestick patterns to look at the chart and understand price reaction, especially when you see them on trend lines or support resistance zone, where you see like this current one I'm seeing on ERUSD, where price is still dipping lower, or this gold trade. It shows that yes, you can see the sell candle, right? Although buyers bought this candlestick and then this form an inverted hammer. What will happen on this day? You'll be looking for what? Sell entry. Why? The previous candlestick is an inverted hammer, and you can put a TP around here. You can see price already coming to the profit target, and you can see throughout today price is selling. This is how you can use candlestick pattern. For me, I would recommend you use it to confirm, and you can also use it to place trade, but I would recommend you use it to confirm your setup. So now what you need to look out for next is trend lines. Trend lines is very simple, and trend line is a tool that is used to see price action like this. So now this is a trend line. As you can see, my trend line here is showing me that price is going towards the upside. So that is the price action. The current price action is that market is bullish, and whenever I see this, I know that I'm anticipating for price to come back here, although that's not what I'm anticipating on gold. But if price come back here, I'm going to be going for a buy. I'll wait for a candlestick pattern that shows my confirmation, and then we're going for a buy towards the upside. I did a video on trend line. You can check my channel go to how to map out trend line for forex market. I posted the video. I think that was one of my first video. You can go, and also don't forget to click on the subscription bell, the subscription button and notification bell to get updated towards any other video we post next on this channel. So that is all about trend line. There are two types of trend line. We have uptrend and we have downtrend. But let's see if I can get more of uptrend and downtrend. So now I'll just brush it a little bit and make the video as short as possible. So this is the trend line. This one is a downtrend. This is a downtrend. Why? It's because when you're mapping a trend line, you map out you draw it towards the price level that price touched 2 times. Like, what am I saying? Sorry. This is how you do it here. This is how you do it here. To validate that trend line, price must come to that trend line like 2 to 3 times. For example, now here, right, I cannot draw a trend line like this. This is not a trend, although this is a trend line, right? This is a trend line. Yeah, this is a trend line. As you can see, price came here, first, second, third, fourth, fifth, sixth. That validates the trend. I can also draw this as a trend line. Well, this should not be the main trend, and this should be like a counter trend line. And actually, the price actually, see how price broke this trend and came to be tested. So this is 1, 2, 3, then broke. So you are saying that price must react to that market movement, whether it's upside or towards the downside, more than 2 times, at least 2 times, So at least 2 times. You can't just draw one like this and say, you can't just draw one like this and say, this is my trend line. No, this is not a trend line at all. Or do like this is my trend line. This is not a trend line at all. Price must react to that trend 2 or more times. So now you can draw this as a trend line because price have reacted 2 times. This is a trend line, and price actually broke this trend line and came to the test, as you can see. Understand? So that is how you can draw a trend line. Price must react to that level 2 or 3 times, and if the trend line is going towards the upside, it means it's an uptrend. If the trend line is going towards the downside, it means it's a downtrend. As you can see, I can mark this as a downtrend because this is the price point for 2. Although this is current price level, if price breaks go to the upside, that means this is no more valid. Right? I'll start looking at how I can get a new trend. But for me, I feel price is just trying to come to retest this trend, or maybe price I feel to retest the trend that's going to the upside. Anyone, but I hope you are understanding, you're getting the point right behind trend line. And I would advise you to also go to my channel to see more on trend line. I did a video on it, so let's go. The next thing you use in your technical analysis is indicators. Indicators are other people's strategy put in code. Helps you to see what they see, able to see price actions. Okay, able to see what price actions. So now we have different type. We have common types. We have RSI, which helps you to see whether price is overbought or oversold. Okay, we have MACD, which is a momentum and trend change indicator that helps you to see price momentum or to see if trend line have changed towards, let's say, from uptrend to downtrend, or from downtrend to uptrend. Okay, and you can also see more of a moving average. We have exponential moving average, we have simple moving average. You can also see on that. If you want to access the indicators, you can just go to this tab here, indicators, and click on it. When you click on it, you see a lot of indicators, right? You can also do your own indicators and rest. So I'll be doing a new video concerning indicators, so cut this video short as possible, and I'll explain everything you need to know about indicators. But for now, these are one of the technical analysis tools. Now the next one you need to know when you're analyzing in the market using technical analysis is liquidity sweeps. Without it, you're not analyzing the market. You need to know liquidity sweep. You need to understand liquidity sweeps in technical analysis. What is liquidity sweep? Liquidity is one of the thing that fuels the market. Like, it is what moves the market. This current movement now, what triggered it was liquidity. This was accumulation, and what happened? It was accumulating to make traders think of something, to make traders either to react towards the upside or, like currently now, this whole thing was just accumulation or consolidation, and that consolidation was used to make to grab liquidity. How to get getting liquidity is simply price taking out trader stop loss, or price taking out trader stop loss in the markets. For example, now if you see this is price going towards the downside. A normal trader, you definitely want to go for this trade. Okay, if you see price comes towards this high, because a normal trader will mark here as what a resistance zone, and whenever I see price comes here, he will want to enter that trade. Okay, and that normal trader will want to do something like this. This will be my entry. I want to set my stop loss at this high here, and I want to set my TP 1:3 or 1:4 1:5, right? You get. Then liquidity will come and do something like what price you do to grab liquidity. So you need to know that this price level is the liquidity. Alright, what does that mean? Traders SL are there, many traders SL are there. Market needs liquidity to move, so it's not can do something like this from and do like here is a profit here. Even more traders self want to be entering because they are seeing this as like a confirmation that the price is going to sell, and then price do something like this, breaks it and strip this liquidity, possibly coming close to this. So and then she understand. So this is how liquidity is. SMC traders always have an order block around here, and that's why SMC traders need that liquidity to confirm that order block. So SMC traders will be entering a sell from here, sell around here, and they'll be setting their TP at this high and close, putting their SL a little bit above the POI. This SMC. So many traders, many people have now set up because they know that market like doing this often. So many traders set up some strategies to help them to wait for liquidity sweep first before they enter any trade. So this is liquidity sweep, and price do that a lot, especially XAUSD. Oh god, that pair. Okay. Especially XAUSD. XAUSD does liquidity sweep every hour. Every single hour. Like it is just like when you're looking at this, as you can see, it is not organized because it is just looking for liquidity, because mainly like billions of traders are in this trade, are on this chart alone. So they are always looking for liquidity to move. You can see this sell now, well, liquidity sweep being swept. This is a resistance zone that was broken. So many traders will be going for a buy, and what happened was the market just hit their SL like this, price will just start dipping like crazy on XAUSD. You can see the massive sell, and now it has formed consolidation. Many traders now will be going for a buy, thinking market is coming to fill this fair value gap, or come me, I set my order block here, I say okay, yes, price should come to this fair value gap, strip this liquidity and go to the upside before selling. And what happened? Many traders were placing buy and hit their SL and started selling again. That's how gold does every single time. So gold grabs liquidity, so you must understand liquidity as a technical trader. If you don't know liquidity, that means you are seeing the early stage, right, as a trader, and you need to also dive deep into it and learn more on it, because it is very, very important, especially to become a profitable trader. And also implement your strategy to always wait for liquidity sweep before placing any trade. If you don't see any liquidity sweep, you are the liquidity. Simple. It's as simple as that. Either there's a liquidity sweep before price is your order, or you will be the liquidity. That's how market is. Even on ERUSD, as of last year or like this year have been more less harmful. Last year ERUSD was damn crazy, like so damn crazy. Liquidity sweep, just like XAUSD, but this year it was more cold because of government shutdown. So that is all you need to know about liquidity sweep and stop hunts, right? That is just simply stop hunt, liquidity sweeps, stop loss hunts, something like that. So and always place your entries. Whenever you put your entry, always wait for liquidity sweep first before placing your entry. So you need to know about entries and stop loss. This is a tool used to map out entries and stop loss. You can enter around there, put your TP around here. This entry point and this is stop loss. These are entry points, this is stop loss, and these are take profit. And it's very, very important to also understand this. This shows you your RR. This is your RR, right? This is your closed P&L. I'm going to see if I can talk more on it. Okay, but for now I want to keep this video as short as possible. This is your stop loss, and this is showing you the amount of price from your entry to your stop loss, right? They show you an amount of price from your entry to your TP. Okay, so the amount of points, sorry, these points, I mean this is the price here. Okay, so that is all you need to know about entry and stop loss, and you can also use them to apply to your risk, to your trading rule, and understand more on, to implement them more on you as a person, your trade psychology and your trading rules and trading strategy. So now when you are talking about technical analysis, also you also need to know what trading psychology, and this will be the last topics I'll be talking on in technical analysis. So trading psychology is trading psychology is very, very important. Trading psychology is understanding yourself, is being disciplined, is following your rules, is avoiding emotion trading or avoiding revenge trading. Trading psychology is managing your risks. It's trading like a business, not trading like a get rich quick scheme. And it's very, very important for you as a technical analyst to know your psychology as a person when you are trading. I understand. So for me, although I had a friend that don't like seeing red candles on his chart, right? So he changed his chart color to yellow and ash and that is his psychology as a trader. He have made it simple for him to trade because he doesn't like seeing red candlestick, but now he has adjusted his trading, his technical analysis together with his psychology. Okay, so and this is very, very important because it allows you to be able to sit down the chart and analyze the market properly. Like for me, I know that whenever I look at the chart too much, I trade nonsense. So my trade psychology is that once I place a trade, I get out of the charts ASAP, like I'm out. Whether I trade hits my TP or not, I'll just wait for like 2 to 3 hours. I check my chart. I use trading view to check whether market is hitting my SL or TP, because if I go to MetaTrader 5, I don't know, something can enter me like this, I'll just close the trade. So I don't do that. So instead I go to trading view to check my TP and my SL to see what price is doing. Okay, because I sell them everything on trading view. I can also recommend you to do the same. Alright, so I recommend you to do the same. Also, put in realistic stop loss and take profits. Okay, for me, I use 1:3. I've been saying it in my previous video. I always use 1:3 to 1:3.5, and I recommend you to do that too, because price most time always going to hit your TP whenever you use that risk to reward ratio. On that, controlling your greed, controlling your emotions is also very important in technical analysis. So that is all you need to know about technical analysis. So what do we talk about on technical analysis? We talked about, although we summarized everything you need to know about technical analysis. That is simple trend lines, supply, demand, support, resistance zones, right? We talked about candlestick patterns, and also we talked about trend line. Okay, indicators. Alright, we talked about indicators. Then we talked about liquidity sweep and stop loss hunting. We talked about entries and stop loss take profits, your risk to reward ratio, right? Pips. What are pips? What are pips? I think I could have talked about pips. It's not really important anyway. So really, this is just to cut the video as short as possible. Thank you guys for watching everything about technical analysis. Please, I also encourage you to please subscribe to our channel and click on the notification button so that you always get updated to any new video we post on this channel. Thank you for watching and have a good day.